Welcome to Diversified, everyone, where our mission is to have you live in a life filled with wealth, health, and happiness. Today, we have a very special guest, the one and only Ted Wolfer. Ted is the managing director at White Clay Insurance. And in addition to his 30 years of insurance industry experience, he has further expertise as a financial planner and management consultant. This extensive experience has enabled him to develop a more holistic approach to risk management, prioritizing total cost of risk over simply selling policies with higher premiums. Quite a bio, Ted. How you doing today?
Sounds exciting, doesn't it?
That makes you sound more important than you are. Uh, so tell us a little about your background and what got you into this side of the business.
Yeah, sure. So I started my career out like a lot of people in finance and insurance do, selling life insurance at kitchen tables 30 years ago. And after a 20-year career as a financial planner, I made the switch over to working in property and casualty insurance, focusing primarily on risk management. And after spending 5 years working for a captive insurance carrier, here we are today.
Beautiful. So I know at your firm, you take a really big, like, holistic view on risk management.
Yes.
When it comes to sort of the property and casualty side of things. Explain that a little more to me.
Well, the approach that we take is that anybody who watches a football game for 50 minutes is going to have 100 opportunities from advertising to go buy a new insurance policy. You know, if we spend just a few minutes online or a few minutes watching TV, we're going to get solicited by lots of big national insurance companies, and they're going to have two constant themes that they hit people over the head with. One is price is everything. And the second is that bundling leads to lots of discounts. And while these work sometimes, it's not always quite as simplistic a solution as people would like to think that they are. And so what we've found is that by spending a few minutes doing customized insurance planning and risk analysis for people, we're able to actually focus more clearly on what it is that they need from an insurance company by identifying the risks first, then worrying about the products.
Got it. That's a refreshing approach to things, isn't it?
It seems so simple, but apparently it's rare.
Well, it's why we like to partner with good guys like you. So tell us some misconceptions about property and casualty insurance.
I think one of the biggest misconceptions people have comes down to understanding what's covered and what's not. One of the things that we like to stress to people is the idea that we're protecting something that is sudden and unexpected. And so the examples we like to give are around things like water leaks. If I have a pipe that's been leaking for a long, long time, it's not going to be covered, it's maintenance. But if that pipe suddenly bursts, it's sudden and unexpected, we're going to have a coverage conversation at that point. And I think a lot of times the lines get grayed for people between what's maintenance, what's a home warranty, what's insurance. We have to be more clear about that.
Yeah, that makes total sense. And what's good, just because there's been a lot of chatter with companies getting out of this business or raising rates crazily. It seems, especially with homeowner stuff. What's going on? What's going on in the industry? What trends are you seeing?
What's going on, and I'll tell everybody up front, we are in right now what is called a hard insurance market. What that means is it's harder to find coverage. It's harder to find companies that are willing to accept the risk. This is the hardest market we've seen since I've been in the business for the last 30 years. There are a lot of reasons behind it, but at its very core, across the country right now, the average property and casualty insurance company is losing about $1.17 for every dollar of premium that comes in the door.
Wow.
So obviously that's not a sustainable business model in the long term. So from that, we can tell anybody you need to expect to see rates go up. You probably need to have some conversations about managing your risk somewhat differently. And this is where we're coming to the table with this. And we're going to see some companies experience some pain. We may see policies get non-renewed. Somebody will have to change carriers, things like that as we come through it. And it could take a couple of years for everything to normalize again.
So don't be insulted if you're one that it happens to. Don't take it personally, right?
They're to every single consumer out there, they're not picking on you, I promise you.
Yeah.
But they are having to change the way they do business.
It can feel dirty. I get it.
Yeah.
So I've had the pleasure of working with you
Mhm.
personally. Talk to us real quick about some of the tech. I think you have some pretty cool technology tools that's
Yeah.
worth sharing.
Yeah, so when we built the agency, we had the benefit of starting it from scratch with no legacy software or legacy technology in place, but with a lot of years of experience to know what we needed things to be able to do. And so we were able to put a lot of things in place that allow us to communicate with our customers in the way that they want to be communicated with, whether it's a phone call, an email, even text messaging. We do a lot of work online through social media, both in terms of providing information to our clients and to our potential clients, but also in terms of communicating what's going on. We have storms coming through and things like that. And then we've also set up technology so that if someone does want to have us look at their policy or profile their risk, they can actually go online and submit that information to us directly from their current insurance companies without having to.
And so it's made it a whole lot more of a streamlined process to do business with us, or at least as much as it can be working with insurance companies.
Right. No, that's great. Yeah, and I can tell you it's been really neat, some of this tech, and I like companies that are a little more forward thinking, pushing the envelope there, especially in a kind of stodgier, older, complacent business that a lot of P&C agents fall into. That's awesome. So one of my favorite questions I ask people before I let them go, and we'll of course have you share your information or say it, and then we'll share it below, is give us one tip as it pertains to your world you want people to remember from the interview, from the call here today, and maybe something they don't know.
So I would tell you the biggest thing is to remember that this is a conversation about risk management. It's sometimes easy to get blinded by the small things like, do I have low deductibles? Or is the insurance company going to pay for my new windshield if I get a stone in the windshield? But the real reason we have this stuff is for big losses. If my house burns down, if somebody sues me, if I total my car, those things that are much more rare, but much more financially catastrophic. And as we go through this hard market, I think it's important that we all keep our eye on the ball and focus on getting the big picture right. One of the examples I always give, and it's a little more parallel to your business, Andrew, is if somebody needs a $2 million life insurance policy, they go out and they shop for a $2 million life insurance policy. They don't go look for a policy for $100,000 and try to say it's comparable in any way. With property and casualty insurance, we don't always, as consumers, think that way because we're so focused on that bottom line. And we're trying to bring the focus back around to what's the big problem I'm trying to solve. Now let's find a company that can do the job.
Right. While still trying to find at the most
within those parameters,
price.
For it. Exactly.
Absolutely. Awesome. I love it. So, Ted, before I let you go, can you tell all these wonderful people how they can get in touch with you, your information? Of course, we will share it below, so you don't have to write it down the second, but please share.
Yep. So if you go to our website, www.whiteclayinsurance.com, there are links all over the site to contact us and send us information. You can also send me an email directly. It's tjwolfer, WOLFER, @whiteclayinsurance.com, all written out. We respond to emails typically within less than 24 hours. Phone calls are also fine, 302-525-6720.
There you heard it, the one and only Ted Wolfer. We appreciate you so much, Ted. Thank you for joining. It's been a pleasure.
Have a good one.
Yeah, absolutely. And for all those looking or inquiring, please reach out. We're happy to put you in touch as well. As always, I'm Andrew Rosen, President of Diversified. Stay wealthy, stay healthy, and stay happy, everyone. Take care.